Okay. Thank you, everybody. I think we're ready to get underway. We're not underway. Okay. How's that for a level? Testing, digital innovation. Okay. Ready to go? Thanks, everybody. I'm Rich Gilmore. I'm the CEO of Carbon Growth Partners. We're a specialist investment manager in the voluntary carbon market. And one of the things that we're here to discuss today is along the lines of where's the money? And so lots of talk about increased ambition, lots of talk about increased action. That's going to require massively increased finance. And that finance doesn't just get delivered to sort of, I guess, nebulous ideas. They get delivered to real projects, delivered by real people in real places for real impact. And we need to scale that impact and scale those dollars fast. So we've got quite a diverse panel today. I'm going to start with a couple of introductions, and I'll ask each of the panelists to introduce who they are and what their business is, sort of place in the carbon and carbon finance ecosystem. So on my far right, Bill Pazos, founder of ACX, Singapore and UAE domiciled carbon exchange. Jules Matapierre from Offset 8. Alexei Shedrin from University, and Lena Mechenkova from Vlinda. So Jules, over to you first to quick introduction.
Hi, everyone. My name is Jules Matapierre. I am the co-founder of Offset 8 Capital. We are the first regulated carbon credit fund in the Middle East. Our goal is to deploy capital in Africa and Southeast Asia, mainly on nature-based solution projects, and to help governments as well as private entities, industrials, to reach their net zero target.
Hello, my name is Lena Mechenkova, and I'm exactly representing the projects in Africa and Southeast Asia, high quality ones, which need money, So we are project developers. We do community-based mangrove reforestation, and the goal of the panel today is basically to draw the path between the two of us, so that they would have the projects they need, we would have the money we need.
Hi, everyone. By the way, happy to welcome you at our Digital Innovation Pavilion. I'm Alexei from EverCity. We're co-hosts of this wonderful pavilion. We provide software for carbon project management to streamline this process and accelerate climate financing in the Global South.
Hello, everyone. My name is Bill Pazos. I'm CEO or co-CEO and co-founder of ACX. We're a digital carbon exchange based in the UAE with a distributed carbon footprint, distributed exchange footprint in, let's count them. Indonesia, Singapore, Brazil will be announced soon. Abu Dhabi, we also provide the exchange for Eon. So it's a distributed network of exchange. And really what we're trying to do is create a price signal in order to promote investment in carbon projects.
So it's really loud, isn't it? I'll hold it away a little bit. At this COP and over the past sort of 6 to 12 months, there's been a huge amount of discussion about everything that's wrong with carbon markets and with climate finance. But there's also a lot that's right. And so I'm going to give the opportunity to each of the panelists to start us off on a bit more of a positive note than usual, and ask from each of them in their individual perspectives where they sit in the market, what do you think is something that's really promising that's happening now that your company can do, that you're seeing, that will help you in the case of you, Jules, perhaps to deploy more capital, and in your case, Elena, how to raise more capital. So Jules first, what are you liking what you're seeing at the moment?
Well, to start with, what we're observing is an increased scrutiny when it comes to carbon markets. How do you register a project? You have more analysis which are being done both from the private and the public sector, especially from the media perspective. What that means is that there's a greater effort being put into ensuring the fact that, well, not only you're generating carbon credits, but that you're also having an impact on the community and on the biodiversity that's around it. And for us as investors, it is extremely important. Why? Mainly because those projects are 10, 15, 20 years long. And in case you can have a positive impact on the local community and the population, and they understand it and they see it, the result of that is just a better project. With you ensure the fact that high quality carbon credits are generated, and that that greater ecosystem where we want to deploy capital to is everlasting, because then you go through a generation of project and a second and a third, as long as you help the local people. So this is what I'm seeing, and I'm very happy on that side.
What we see as project developers and people who ask for money to be invested into the project is that the potential buyers coming to us are becoming more and more educated. So they understand more and more in how mangrove reforestation carbon projects work. They start asking right questions, and it's really hard for a small team to educate everyone coming to us. But we have invested a lot into it. But now we are seeing that there are more and more clients which know what they want, which know what they check and how to check it and what to look for. Particularly, what are the things we were battling about is the community carbon share. And now there's the understanding why it's needed, at least growing understanding that this is something that's needed. If you want to have a sustainable project, you need to make those communities the true owners of the project. And this is how it happens in mangrove reforestation. The other thing which also is positive, there is the growing understanding of why we also should allocate money for research. Because when you have data, when you have grounds for your conclusions, this is how you make this project economically viable and also sustainable.
So two things. First of all, I started my career in carbon markets in 2011. So I've seen ups and downs and flat years as well. And I'm really excited to see that Paris Agreement brings us closer, to the growth of carbon markets. So that's first. And then second, I'm also was engaged in the world's first carbon credit transaction on the blockchain in 2017. Everyone was afraid of blockchain. The carbon market players were afraid that it's going to phase out the players, the existing players. And now I'm happy that it's kind of happening, because the market has been for a long time kind of an oligopoly. And now we are seeing new players, new initiatives, and continents and countries, especially in Africa and the developing world, they're opening up to creating their own infrastructure, to using digital technologies to leapfrog from their current state, to more sovereign state of their carbon markets. And that's really exciting.
Yeah, sort of a bit of an extension there, in the sense, one of the things that's important is that countries around the world have realized that there's value in carbon, and they're positioning themselves accordingly, right? We used to be able to maybe find a project in Indonesia, register it in Washington, and then sell it to a German corporate, and Indonesia would actually not even know that had happened. So the Paris Accord has sort of brought that to the forefront, and every country in the world seems to want at least a registry or a transaction platform. And so that for us as a company is very interesting, because we're providing those platforms, but we're also accumulating liquidity across all of them. So we're sharing liquidity across all of these different platforms, which allows for the market to scale. So I think that's something that we're seeing that I think is important. The other thing that's very important is that more countries are actually becoming active in creating a price signal for carbon. So you have Singapore coming up with their carbon tax and allowing for certain carbon credits within that carbon tax to certain carbon credits to offset that carbon tax. That's a huge innovation in the market, although it already exists in Colombia, to a certain extent in South Africa. But we're going to see more and more of that. So I think that's another thing that's out there, where governments are maybe not perfectly, but at least more and more looking to use the price of carbon as a policy instrument.
Thank you. And we'll stay with you, Bill, there, because Alexei mentioned just in passing there about the role of blockchain technology. And the ACX platform is on chain. And so I think not as many people as we think know what that actually means. So between the two of you, give us an explanation about what it means to be putting, say, carbon credits on chain, how that works, and how it's different to the prevailing OTC market that we've seen to date. So who wants to volunteer to take that one first? Alexei?
Sure. Yeah. So let's get to the basics a little bit. So blockchain is literally a distributed database. So it's like a new generation of databases. We used to have centralized databases, or like auditing books, right? So now this database, if you look at this picture there, right, it's kind of global, and there is no central point of error. So the data which is put into blockchain stays there forever. It's available to anyone who wants to access it. So that gives us a very important feature for carbon markets, that we can make sure that the data is immutable, there's no double accounting, and that we can ensure the ultimate transparency of data. Of course, it depends on which blockchain are we using, whether it's a private or public blockchain. That's another story. So that's the transparency layer, and we can track every action along the carbon value chain on the blockchain, so that we can see at any point who was involved in the transaction, in the origination, and that helps to avoid greenwashing. And another exciting feature is related to enabling to issue carbon credits on chain, carbon forwards, carbon-linked bonds in a very simple and a fast way, where we don't need the banking services, repository, and all the heavyweight infrastructure that used to be in the financial markets. And finally, it brings liquidity. And I'll end here and pass it to Bill.
Yeah, I think the interesting thing for us is that we're a fully regulated exchange, and because we sit on chain, we are like a dream scenario for regulators. Literally every single transaction happens on chain within a smart contract. There's no, it's effectively impossible for us to backtrack any transactions because every transaction happens within a smart contract. So that from a regulatory standpoint is extremely important. Interestingly, and maybe we're talking about positives, but one of the things that's somewhat challenging is that there's a lack of understanding of what actually blockchain and having something on chain actually means. And so sometimes when we're dealing with a bank, a large US bank, and we're onboarding them onto the exchange, it gets to their compliance people, and when they see that we're on chain, they start having palpitations, and the process sort of becomes a lot more problematic. So even though we are probably a much safer bet in terms of a platform and even being regulated, it does have its drawbacks, even though they're mostly positives.
And Jules, Bill was talking there about the role of banks and other big institutions, and it seems that in the market there's lots of interest for institutions and companies to provide effectively a zero risk offtake. If you successfully generate the credits, I'll buy them. And it seems like if you're at that point in the project, money is fairly abundant. But many projects aren't at that stage, and they need, the subject of this session is upfront financing. So tell us a bit more about how Offset 8 is like getting the confidence to bridge that gap and be the sort of early investor and sort of take that risk, and how you manage that.
Well, to start with, the first gap is on the knowledge and on the education part. A lot of the investors, why would they willing to be taking a risk if they don't really know what they're investing in, and where they don't know exactly how to allocate the risks? Because what matters at the end of the day is knowing where you can potentially have cracks, whether it's in your contract or whether it's in the project and its generation. So you have a lot of what we call internally the initial DD. The initial due diligence, essentially, you need to take a lot more risk into account because it's just not on the financial side. Diversification of portfolio, where do you see the price going, the generation. But there's also, for instance, reputational risk. Who is in the team? Do you have the government that is involved as well? Is there anyone that ended up in the wrong media, for instance? Who are their other partners? Because do they have financial partners? Do they know who they want to work with for their PDD? Are they using satellites? So what's very important for the investors is to understand and to change their mindset towards just investing in something and getting a capital out of it, and investing in a community or in a project, and making sure that the whole ecosystem there is available and safe. From that point onward, then you can focus further onto the methodology. You can focus onto the negotiations on terms and contracts and prices. And most importantly, you need to divide the project into milestones, because first you have the land, then you have the plantation, you have the selection of what species that you want to plant, life expectancy of those species, what is the amount of carbon you can extract from the floor. And all of these cost money. So what's important when you provide capital to those communities is to understand, well, how much do you need and when? Instead of telling me I need $10 million, fair enough. But how do you allocate those $10 million? How much is your PDD going to cost you? How much is the team of scientists coming on ground going to cost you? What is your operational expenses? What's your CapEx? And by deriving those milestones slowly but surely and unlocking capital bit by bit, not only as an investor, you take less risk, but you also ensure that you have an impactful project, which is there, and you see it develop. From then on, I do believe that with a good due diligence and a good analysis of the project and its people, unlocking capital bit by bit makes a lot of sense, because it doesn't need that you need to deploy 10 million right ahead. In some countries, in some projects, $50,000 is a huge amount. That's going to benefit a huge amount of people too. So it's about moderating the risk, moderating the amount, and having a good dialogue with them. That is essentially what we want to do, and we encourage others to do.
And Lena, you said at the beginning that what you really know how to do well is execute on community-based mangrove restoration projects. And as it happens, mangroves are my favorite ecosystem. In fact, Tom in the front row who already knows this. I own the URL bluecarbon.com. I registered like 13 years ago and have been waiting all this time for mangrove projects to get to scale. And you're there doing really complex things. A mangrove tree is a complex organism, and it lives within a complex ecosystem, and that ecosystem exists within a complex social and political ecosystem. And now you got this guy coming along, throwing all these other requirements on top of you for his due diligence. How do you feel about that, and how do you kind of balance the need of those investors in DD and also servicing the communities and others that you have? Is there a conflict there, or that's just the reality of being in this market? And how do you manage that?
Basically, when we discussed it with Alexei at the beginning, what we could contribute, another founder of Lender said that probably one of the pitfalls which we saw is the attempt to standardize the projects which are not standard at all. So even if we look into mangrove reforestation, there will be projects and projects. And absolutely, when you start from standard point of view, there's nothing standard in it. And we are not scared of any due diligence questions. We learned that they will never be the same. We learned how to differentiate between good due diligence questions and stupid due diligence questions. We are happy to educate our potential clients if we know there's potential. because sometimes it's not for everyone. It's really a complex investment, high risk investment, and you need so much understanding in what you are going to invest in that probably you first need to be educated to learn a little bit more, or to find someone who will help you to understand more than you are understanding at this particular point. So basically what we face is that we have a variety of investors coming in and asking us questions. And if the questions are good, eventually, if they have experts on the other side, eventually they will see that this is good, this is the risk, this is the set of documents they have that helps us secure this. This is the gaps in legislation in a particular country, which we cannot close at this particular stage, but we are willing to take the risk. And if there's understanding, this is good. This is when the match happens. If there's no understanding, if there's a lot of stupid questions, if they don't understand that the questions they are asking sometimes come because they don't know how the project functions. So that's the problem. Otherwise, it's not. We see that that's the way to go. It will be personal anyway, like it will be case by case. It will be a particular project developer, a particular site, a particular project partner on the ground, a particular country, a particular species of whatever trees you plant. So it's going to be like this for now. Yeah.
I think about this amazing answer, and I want to pass it on to Rich, because we had this wonderful conversation in Senegal about his early stage investment strategies. So if I may ask you to elaborate on what Elena just said, and what do you consider when you make your early stage investments, whether you check all these documents or you use some other factors, because you're one of the earliest carbon investors that I know. Can you elaborate, please?
Yeah, we're fortunate in that we have quite deep expertise in a number of project types. And we have been some of the earliest investors. And so one of the things that when we're making, we've did this in a investment in Mexico, often make quite a very early investment outside the fund, or in the case of Mexico, the project made an investment outside the fund at the manager level, because that project, we thought it had a lot of potential. We really cared about a couple of things, and Jules has already talked about these. The robustness of the community relationships, not just, and think of it as an analogy. It's okay to have a signed agreement with the ejido in the case of Mexico, but when you turn up there on the ground, is the chief of the village saying to the project developer, "It's nice to meet you," or "It's so great to see you"? And you don't kind of get that. There are quantitative things that we care about. Do they have a signed agreement with the ejido? And then there's qualitative things that we care about that you really only get with experience and being there. How good is that relationship really? Anybody can build a model, financial model, and we have a financial model. Anybody can do the research on the Article 6 alignment and the price of credits and the willingness to pay. And in the case of Senegal, we had to go and do quite a bit of analog research about what is the value of compost in Senegal, who's going to buy it and why and at what price. But for us, those are the sort of quantitative ones. The ones where we add value with our experience is the qualitative assessment. What is the strength of that relationship? Does this team really have the capacity? And where we're not 100% on that, we put our own money in first, make that initial investment, de-risk it, get all the docs in place, do further DD, and then say to the investors, look, we've done the first part, you guys come in with the rest. And I don't know, Jules, is that the sort of, you've already talked about your process, similar?
No, on that side, exactly. Does being able to integrate those qualitative aspects is a key factor. And so you can't standardize it. You cannot. And so because of that, this is why I think as time passes, you'll have more people coming because they understand that part if you're willing to take that risk. And I think that comes into education. It's difficult to blame those financial institutions, mainly because, well, if you're graduating from finance or economics, you're going to go to a bank, you're going to go to a hedge fund, you're going to go to a PE fund, where you're going to practice for 10, 15 years, one thing that makes you good at generates capital. And then suddenly there's this whole new world that is way more uncertain, where quality suddenly becomes something important that generates capital. And well, quantifying this is a challenge, and this is where education is really needed, and that relationship that you can have with your project partner. You need to be able to take your ego apart and say, I don't understand that point, or what is this in this document, or ask questions and say, I didn't understand what you told me, please guide me through. And the last part, which Rich mentioned, is you need to visit the people. You need to go on the ground. Doesn't matter where it is. You need to take a flight, shake hands, talk to the community, and get a feel of it. So then you can take the right decision as an investor.
And yes, of course.
Actually, when investors are serious, this is what they do. So when we agreed on the financial terms, they actually traveled to the country. And this would be a project which had already been started. And there would be some planting probably done, or at least degraded areas mapped. But there definitely will be communities with which we have already talked by that. And then you can come and you can see and you can understand for yourself whether these are people who are really on the ground and whether these are people in the community who are going to work with you or not.
Then I think you mentioned before standardization, and standards aren't standard. And Bill, almost by definition, ACX is seeking to standardize trade in the market more. We've seen in a different contract, a different standardized contract, that can have a negative effect on the market, because what we're asking people to do is just buy effectively an anonymous contract and then be delivered, the project of the seller's choice. So is the sort of maybe not rush, but the move towards more standardization of trade and more exchange-based trading actually reducing or raising the risk for buyers in the market?
Well, I think that standardization is definitely where we need to end up. That's if you draw this parallel with just anybody that's farming any commodity, they can get their seeds funded, they can hedge their future product in liquid markets. There's a clear price signal for the underlying commodity. So the entire menu of financial options are available to someone in a traditional commodity. That's not the case in the carbon markets, right? And there's many reasons why that's not the case, but ending up with a standardized contract is actually where we need to end up. The problem that you have is that today there's reputational risk every time a corporate buys a carbon credit, and so that means that they really have to get into the weeds in order to buy that carbon credit. So until that gets formalized, standardized contracts become very difficult. So we do have, for example, CORSIA, right? So CORSIA comes up and they give us these are the types of projects, these are the registries, and these are the vintages, and you have an exact outline of what projects are eligible under CORSIA. So you would be able to then create a CORSIA contract, and that CORSIA contract could trade efficiently. What will happen then is that the airlines will be able to hedge themselves. The airlines will be able to buy the credits. Speculative capital will come in and provide liquidity for that underlying instrument. And what you'll have is, because of that speculative capital, you have a lot of capital coming in chasing a few number of credits, and that then in and of itself will push the price of carbon up and make carbon projects more attractive, and then we'll launch more investment into the carbon projects, and the cycle will continue. So that's where we need to get to. But the reality of a carbon contract is that you will always get the cheapest to deliver, right? So cheapest doesn't really, we shouldn't use the word cheapest. You will get the most efficient carbon ton to deliver, right? So it's really as I said at the beginning, it's really in the hands of the regulators to say, this is what you need to do. These are the types of projects that we accept under these registries with these methodologies, et cetera. And once you have that, then the market will scale. I know it's relatively controversial, but that's where I would sit.
One of the part where I do agree that you need an exchange is you need an index. You need an index that can be traded on, and that is needed for any financial institution for their books. What is the settlement price of today, and what's the price history? How does it look like? Because at the end of the day, this is one of the fundamental tools that you need is price data, whether it's for spot market and forward markets. And I think when you bring transparency on those prices, you do help, well, investors, project developers, but you help the ecosystem at raising capital and deploying capital, because I have more, at least whether or not it's an illusion, more visibility over what's going to happen to my prices, and especially when I'm going to try to fix them on the forward curve. Now, one of the things that I'd be happy to have your input in on the others is Rich and I were focusing on high quality carbon credits, where we really handpick those certificates. And that means that on the resale side, we're likely to go OTC, because we want to make sure that the person that's in front of me understands exactly what he's purchasing and can extract all the quality out of it. That's going to help in my negotiation, and that's going to help in my pricing, but also to have that safety for an offtake agreement, for instance, for 5-10 years. My fear on the exchange is on the blending. I don't want my credits to be blended with others, because I spend so much efforts and tears and money on having a high quality carbon credit. So in that sense, I'm curious to have your integration on this. It's a genuine question.
Yeah. No, so today you're spending so much sort of sweat and tears in taking the high road in developing these projects, because there's absolutely no guidance from the regulatory side. So if you look back at the beginning of the EU ETS, there was something called the linking directive, and the linking directive stipulated the carbon credits from CDM that were eligible for payment within the EU ETS. It was as if someone screamed fire in a theater, right? The 10,000 or so, I think it was 14,000, I can't remember, institutions in the EU ETS that were governed went out looking for these projects all over the world, right? It was very clear the methodology that should be used, the kind of projects that should be used. It was a very sort of standardized process, right? Myself, I mean, I was an investor in 32 pig farm biodigesters, right? Because it was a very clear methodology. We had to go in, we had to cover the lagoons, we had the baseline was clear, everything was clear. So today in this market where there is no guidance from above, spending an inordinate amount of time in curating your project and making sure that your project is the most beautiful project in the world is important. I know this sounds callous, but as it becomes more and more clear that certain projects are eligible under compliance markets, which these compliance markets are going to be multiples of the voluntary market, there's going to be a lot of activity in just going after these. Now, there will still be value in projects that go that extra mile, just like there's value in artisanal bakeries, right? It's a smaller market. They pay a premium for it, and they're just different markets. So that's how I see the market progressing, actually.
Yeah, and we're seeing that already in the Australian market, where with the introduction of what's called the safeguard mechanism that provides compliance demand, the spread between the charismatic projects and the least charismatic project, let's call that nature-based restoration and landfill has collapsed from, I don't know, $10 or $15 a tonne to $1 or $2, because the buyers say the government said it's okay, so it's okay with me. That's the one I'm going to use. And there was a question here about global cooperation, which your mention of compliance markets made me think of, Bill, but I'm going to ask a slightly different one, which is, if you look across the panel, there's 5 people, fair-skinned, 4 of them men, all of us wearing a suit. And we're talking about this really existential problem that is most existential for people, in particular women and women of color in the global south. And there's none of them on this panel. And so how do we individually and collectively make sure that those people and communities that are participating in and benefiting from and should be leading this market have the opportunity to do so more than they are being given today?
You want to start?
Yeah. So thanks for noticing that, Rich. Actually, at the Digital Innovation Pavilion, we do care about the gender diversity and, giving the voice to the global south. So yesterday was our Africa Day. Yeah. So, and we learned a lot during yesterday, because we had a lot of conversations. What is one of the biggest learnings from yesterday and, from our trips to West Africa and beyond is that in order for the global south to develop its own project developers, and auditors and other parts of the ecosystem, there needs to be knowledge sharing and capacity building. And that's, what has been discussed at the COP for many, many years. But what connects us to the topic of this pavilion is, of course, the digital innovation. And with the digital innovation, the curated approach to projects done by, state-of-the-art project developers, people who's been there, like for 20 and more years, right? So the previous discussion, this can go down to, to a lower level, to a level where you don't have to have so much experience and know so much and experience Kyoto Protocol and all of the changes. So technology and some sort of standardization within technology gives access to the local players to this knowledge that we accumulated during these years. So it's like with AI, right? Where many of us are using ChatGPT now to create whatever we create in our daily life. So I see the technology here as this collective GPT that helps local players leapfrog and become state-of-the-art project developers, auditors, registries and regulators, thanks to the digital technology. And that's actually what is happening, and what's also something that excites me that I mentioned in the first instance.
Any other thoughts on that? We've got a few more questions here to get through, but I would also want to ask if there's any questions from the audience from our esteemed panel before I ask a few more questions. So any questions from those in the audience? Not yet, still thinking about it. There is a question. I beg your pardon.
Thank you so much. I think I would first like more answers to your previous question, because I think it was fantastic. And the second one was on blockchains and the use of it when it comes to carbon markets. I think, Alexei, you mentioned the advantage of not having double counting. I see it on the contracting side, like being able to track all the transactions. But I think on double counting, we have a Vera system, which is a very old and, in my opinion, bad Excel sheet, but it still prevents double counting. So I'm wondering what other advantages, and I would like to talk about them, that the blockchain has that is actually, we can use it right now already.
Just to answer the gender question, I was sort of mulling it over, and I think that there's a bit of a sort of north-south relationship with regards to climate finance. So you've actually called to the panel the north side of the equation. I have relationships with project developers in Brazil, in Africa, extremely capable people, women and men both. So I just think we might just be a victim of where we are and what we've done, because I honestly think that there are some extremely capable people that I've worked with over the years. And then with regards to your question on blockchain, there's even a scarier thing with regards to Vera, right? Because as you move forward, and we talked about Singapore and the taxes, they're saying these Vera credits can be used to pay for this tax. So I would venture that that's no longer a voluntary carbon credit. That's a security, right? Or not a security, but it should be a regulated asset class, right? And you have an NGO in Washington that is not regulated, issuing literally billions of dollars worth of carbon credits that are now sort of migrant CORSIA, migrating into what are effectively regulated areas. So I had this conversation with Robin Ricks just when we were in that panel. I said, you guys, this doesn't compute, right? So I think there is, and the beauty of using blockchain for issuances of carbon credits is that that's it. I mean, there is no, today, if you retire a Vera credit, you get a PDF, right? There's absolutely no real control in terms of, you can have a third party retire it for you, takes a copy of the PDF and sends it to 2 clients and charges them twice. So that the system, actually, you don't even have to be, Sam Bankman-Fried to figure this out. It's pretty simple. So that blockchain would definitely address a lot of those holes.
One of the questions, to go back on the question when it comes to quality versus regulation, which at the end of the day, let's be honest, it's similar to tax optimization if we think about it. Now, one of my questions when it comes to now reputational risk is that curation is important to avoid that specific thing. One of the questions that I have is, for instance, if I would buy compliant, CORSIA compliant, I'm an airline, and I buy X amount of credits, by the time I get them delivered, I see which project they're from, right? I do. What would happen in case one of the projects from the ones that I've received is not respecting anything? So, for instance, one of the recent projects from a trading house based in Switzerland that allowed for hunting on its ground, for instance, where everything looked okay, everything was legitimate, except that by the moment I received the credit, I see that it's from this project, khalas, as we say, but suddenly the reputational risk comes in, and it turns out that I am one of the buyer from these. How would that work?
Again, this is probably not very popular, but was a ton of carbon avoided in that project?
No, because it turns out that overcounting.
Okay, so that was a baseline issue, not so much, because what I remember seeing was that there were, the project that I had in mind, there was some issues with regards to some basically moral issues that were happening with regards to the project. Okay, so there, I mean, we have to go, there has to be things like buffers, and we have to use those kinds of activities in order to safeguard the value of this credit. What I've seen, though, in the carbon markets is that There was recently some project where there was some questionable activity with sexual harassment, right? And Vera immediately sort of froze the issuances on that project. And that's a very strange, if you think about it, and I'm not passing judgment on it, but it is a very strange activity because you're asking Vera to be moral police. Really what should happen in the project is that, you should get a policeman to go into this project and, it's in the carbon markets, because we're sort of building this as we're building an airplane as we're flying. There's all these different things happening that are very difficult for us to address and create standardization around. So we need more guidance. It's just there's not a right answer. It's a very dangerous market to live in right now.
On what? No, I'm just.
And Alexia, I actually think that question was originally directed to you about the role of blockchain. Anything to add?
I would add on what Bill said. And in our city, so we prefer to perceive carbon projects maybe less like commodities, but more than like small startups. And they are in a way similar because they follow the same procedures. And whether we look at Vera, Gold Standard, or GCC, or some emerging standards, usually they follow the same set of stages and rules. So that's kind of a standardized process. But at the same time, they're all different. There are different co-benefits, and there are various situations that happen, like this moral situations, and maybe many others. And the price of these, of the somehow, of course, we're talking about carbon, but we might think of it as, maybe as shares of this project, right? Or some other connection to the project broader than carbon, right? And if some moral situation happens, or if the project does not deliver on the timeline, or something arises there, then the price should reflect that. And I think blockchain can actually help to enable that, because it brings liquidity to the markets. And if we talk about forwards, for example, they existed for years, and they were OTC deals which were not liquid, and the price could not be changed immediately based on the situations that could happen, either positive or negative. And when we're talking about forwards now, when we enable their listing on a marketplace, on an exchange, right? They still follow the standardized procedures, and there of course should be framework, at least regional. But those different situations, issues can affect the price, and the price of forwards will reflect those situations. So I think that's blockchain brings us, makes those carbon projects and forwards and credits more bankable, and brings them closer to traditional financial markets, at the same time opening this market for a broader range of investors. And that's a risky investment, but people are spending, there are philanthropists that are just giving the money, granting the money, right? There are people who are playing casinos, and other things. So we need more investors, we need more liquidity in carbon markets, and that's what blockchain is enabling.
Any other audience questions? Tom in the front row, he has a microphone who will pass to over your shoulder. Thanks, Tom.
Yeah, well, thanks, guys. I just got a few questions. One, given the experience that we've got here, I'm probably speaking from ignorance, but in terms of thinking nature-based solutions, is there any, divergence in terms of premium, less premium, when you think it by geography? Or is it very much driven by the type of ecosystem you're getting involved in, say mangrove versus forest? or actually is it very much driven by the governance of the project? That's my first question. The second one is it'd be interesting to hear your thoughts in terms of technology-based versus nature-based price discovery. And lastly, fascinated to hear about the standardization or the hope for standardization. Who's going to do it, and what sort of time frame do you because there's a lot of chatter, etc. My sense is it may happen quicker because there's so much in the Guardian scandals going on, etc. May happen a little bit quicker than we expect. So three questions, interested in your thoughts.
You're lucky they're good questions, because taking 3 was a bit cheeky. Just kidding. So quality of nature-based solutions. Maybe we'll go to the nature-based solutions project developer on the panel.
So I would say it depends on many aspects. At first sight, it seems it's not location dependent, but it is. Say we invested into a project in Myanmar. Guess what happens? So it is location dependent. It will be, there's just political change, a drastic one. Yes. It's fine. There are investors who want to buy it still, but on average, I would say that's quite an issue. In general, you would say then maybe if it's not Myanmar, remember all those nature-based projects. Most of those nature-based projects happen in the countries which, by many standards, wouldn't be considered stable and predictable. Then there would be a dependency whether there's clear carbon legislation in the country, and that's again country dependence. But on a larger scale, that would be the co-benefits with the project, which the project brings, which sequestration of carbon brings. And if we are talking about mangrove reforestation, why mangrove credits are so premium? Because everybody loves what the project does. It's biodiversity co-benefits, it's restoration of a very valuable ecosystem, which you are in love with, and we are also. It's also the ecosystem benefits which come to the community afterwards. That means a huge improvement of the life they are having in the community, in the project area. And it's also a huge contribution on a social level, because if the project is a high quality, a project caring about the quality and sustainability comes to the area, it will be giving jobs to people on the ground. It will be sharing carbon in a fair manner so that the future carbon would be contributing to their livelihood development. So basically, I would say it would be co-benefits of all kinds, and it will be risks of all kinds that will somehow define the price.
That was an excellent answer, and I would add on the case of blue carbon scarcity. So you can fit every single mangrove in the world into Australia 17 times. There just aren't many of them. Luckily, they're highly productive for carbon on a per hectare basis. What about technology versus nature-based solutions and the role of tech-based solutions? I'll have a go at answering that in the first instance, or sharing my view. I think all the focus on nature-based solutions has actually created a lot of white space for technology-based solutions. And technology-based avoidance is by definition permanent. If you didn't emit that ton, it wasn't emitted forever. And I think there's still a really important role for technology-based solutions. The main standards body, Vera, has decided that that's only true in least developed countries for the big technology solutions, solar, wind, and hydro. And that knocks out about 50% of the historical supply from being eligible to participate in the market. But I honestly think we've got to do, everything everywhere all at once. Bill mentioned 32 pig farms before. Really obvious technology-based solution is methane abatement from flaring and from livestock and from peat and other things. So I think there's become a little bit of an overlooked, opportunity set in technology-based solutions because everyone's been focused on nature, but interested in other views in that as well.
No, Richard, an excellent answer on that side. And to complement to it is, for instance, if you go to a developing country, there's a lot of land that's accessible. And while planting trees is very good, or having regenerative agriculture is also very good, you also have an electrification issue. You have an electrification matter that needs to be addressed. And what that means is that nature-based solutions and tech-based solutions have to work hand in hand to make sure that the community benefits 100% from it, especially on the electrification side.
Just a small notice. If you imagine 90% of Africa cooks on wood. So if you come and you say, now we protect trees here, you also need to say, and this is how I will help you to solve your actual problem to cook food. So there should be something else complementary to this particular solution, so that on the whole, that would work.
Totally agree with that. And there should be definitely a diversified approach in various regions and in various countries. And it's not right to say that, for example, renewable energy is not a carbon project anymore, just, because it's everywhere, but it's not everywhere. And, some of the countries, they need support in terms of various types of renewable energy. And it's still a very valuable, input with a lot of co-benefits. So here, diversified approach should be applied. And that's maybe why there is now more room for new standards, other standards, also regional standards that consider the climatic, specialities of a certain place and economic situation as well.
I don't have much to add other than, I don't think we can cherry pick in terms of additionality. We either use it as a litmus test or we don't. And if we do, there's not much of a case for renewables to be added into the mix. That's just my 2 cents. I don't think people will deploy significant amounts of capital simply because they're getting carbon credits into solar projects in most countries. So you've got to decide if you want to use additionality or not. It's not necessary, but it is something you need to decide. And if you decide to use it, then renewables are out. But there are a myriad of other projects, technology-wise, methane capture, for example, and other industrial processes that are extremely interesting. One project that we're working with that I find fascinating is that in the United States, there are incredible numbers of abandoned oil wells, because these wells are transferred from SPVs to SPVs until their yields go down to very uneconomical, and then they bankrupt the SPVs and they go away. And so you have these orphaned wells just spewing stuff into the atmosphere. And there is something to be done there. So you're absolutely, I think your white noise analogy is perfect. We've this time around in the carbon cycle, nature base is the dandy. Whereas in the first Kyoto era, there were no nature-based projects. In fact, the only way you could get a carbon project approved at the CDM level, they gave you something called TCERs, temporary CERs, which, it's impossible that, you buy something that's temporary and you don't know if it ever is going to not become non-temporary. So obviously it was not a big success. But
And I think the standardization question that many of the panelists touched on earlier, where there will be more standardization, but it's going to take time. That'll be driven by a combination of more and better and more consistent standards. In fact, the 6 main accrediting bodies tomorrow are making an announcement about more collaboration and more standardization of the standards. That makes sense. And the work that Alexei is doing to make not the instrument standardized, but the process more standardized and frictionless and more efficient to get the project to the point where it can be efficiently verified in a standardized way. And so I think it's going to come from all directions, but it's going to take time, I think was the consensus of the discussion earlier. And then I think we're just about at time. So I wanted to give everybody on the panel just the opportunity for sort of any closing remarks around upfront financing and liquidity for carbon markets, keeping in mind that we're in the Digital Innovation Pavilion. So any last thoughts as we go from my right to your right?
The last thought would be that I am very hopeful. I'm very positive about the impact of carbon credits into the world and about higher scrutiny, more trust, as well as more transparency on the market as a whole, and more benefits to the community as now they're finally starting to be taken into account. So that's my final thoughts.
I wanted to say two things. Thank you for mentioning transparency, because we truly believe that there's so much in transparency in the way OTC is done, in the way how contracts are executed and stuff. And there are so very few project developers who want to disclose, but there are even less investors who want to disclose what and on which terms they buy. So we very recently closed a deal with a client who allows us to call them a Swiss financial institution. But they said, the reason we signed up with you is that you answered our numerous due diligence questions and you had the depth of knowledge which other project developers don't. So this is probably why we are supportive of any kind of transparency which is there in the market. We are ready to disclose what we have. So let's have it. The more transparency, the more data we have, the more knowledge we have, the more informed decisions will be on all sides. This is one thing. And the other thing, we are all here in a fine, perfect bubble where we know what carbon markets are, what liquidity is, but we probably sometimes need to step one, just to make one step back and to remember why we are doing all this and what's the ultimate goal. And if you talk from this standpoint, like we are doing this to fund what? Projects on the ground which do this and that, which plant mangroves, which will help local people to get more jobs, which will restore a very important ecosystem that will help to solve many problems.
So I also wanted to answer to the gentleman's question out there around the future and then the standardization. So there is carbon markets, they emerged from Kyoto Protocol. And now we have the Paris Agreement, which is, coming into force like more and more in the Article 6 mechanism and other things. So my consideration, and I know that many people share that, is that, the voluntary market will be aligned to the Paris Agreement and its, details that are yet to come. But what we need to do, to move this forward and improve the markets and meet the high standards of the Paris Agreement is exactly what was mentioned and what was discussed here yesterday. Pretty much at the same time, we had a full room of more than 40 people from 5 African countries, and we proposed an initiative called the West African Carbon Market Acceleration Platform that has 3 steps. And the first step is going to each country on the national level, sitting together, gathering all the stakeholders, the communities, the villages, municipalities, the authorities, the developers, the investors, and discussing together the needs and, prioritizing the projects, strategizing together, so identifying them, then using digital tools to efficiently manage and provide upfront financing, and then finally helping out all together on the operationalization of the Paris Agreement Article 6, thus creating a harmonized holistic system in each of these countries. And then if that works, then scaling that to all the other regions of the world. And that was the moment that the event ended, everyone was very happy, and that the vibe, the energy was amazing, that I had a confirmation that this is something that this is the right thing. So we, at first instance, we need to talk together. We need everyone at the table, share experiences, share knowledge, and then proceed from there.
Like Richard, I'll take your guidance in terms of keeping it digital. I think that, I guess, one sort of parting thought is that blockchain and digital technology addresses so many of the concerns in terms of transparency, in terms of double counting, greenwashing, etc. That if we can get the entire life cycle into a digital ecosystem, it will provide a tremendous amount of transparency into the market. It will allow for discovery of great projects such as yours, because it'll be you'll see that you promised 100,000 tons and 100,005 were delivered, and and so forth, and all of that data being public is I think the main thing that digital technologies can bring.
Thanks, Bill and everybody. And we will firstly thank the panelists. Round of applause. And secondly, first among equals, thank you to Alexei. So a lot of us send up to a lot of panels and we say thanks for having us and we go to our next thing without really thinking about how much work goes into putting stuff like this together. Like the content, the fact that 5 of us are here, the fact that there's a pavilion in the first place, that there's a poster up there, that there's an agenda, that there's content. It takes a huge amount of work. And Alexei's been thinking about not only doing that, but thinking, as he said before, about diversity and inclusion and having an entire day dedicated to the Global South, and making himself available to be intellectually interesting and smart on this panel. So to Alexei and all of the partners and all of the people who support it, and AB and everybody else who makes it possible, thanks a lot. We know it's a lot.
Thank you so much. Thank you.